All right, so there seems to be some confusion on the Chapter 3 homework. I got several emails asking about question number 5, and I think it's probably a lot easier than you guys are making it out to be. So I'm going to walk through it with you really quickly, and I think you'll be a little bit surprised that it's not as tricky as maybe it seems to you at first. So I know we haven't discussed in class how to make journal entries yet, but hopefully you've watched the lecture videos and now understand how to create a journal entry. We will go over those the next time we see each other in class. So the first step here is they tell you that on January 1st, 2020, Boeing sells one of its planes to Singapore Airlines on account. That means accounts receivable. Okay, it is the first and only transaction on that day. They sell it for $400 million. It cost them $330 million to manufacture. This is transaction 7 from chapter 3. The only difference is this one's a little easier because there's no cash and accounts receivable. It's just accounts receivable. So to make the journal entry, we will debit accounts receivable to increase it by $400. And then we will increase that expense. Remember, I told you cost of goods sold is an expense for $400. Okay. This is the sale, or excuse me, this needs to be revenue. My apologies. I was thinking one step ahead. So we're going to record the sales revenue here. What they're asking us for is the sale for step 1. So we're going to hit record entry. Then step 2, they want to see the expense, the cost of it. So we're going to increase cost of goods sold by $330 million, and we're going to decrease inventory. We sold a plane that cost us $330 million. It's not in our inventory anymore, so we're going to get rid of it, and then we're going to hit record entry. Now we can view our GL. I've told you guys many, many times the GL is extremely useful for looking and seeing what exactly happened in that transaction. Here we can see that we had the revenue piece, and then we have the cost of goods sold or the expense piece. Those two things happen at the exact same time. Okay, so requirement 2 just asks us, okay, well, what about the income statement? How is the income statement going to be impacted? Well, we know we only need revenues and expenses for our income statement. So revenues would increase, right? So we've got sales revenue is going to increase by how much? Well, it increased by $400 million. That's how much we sold it for. We also know that the expense that we had was cost of goods sold. It's also going to increase, but only by $330 million. Okay, so that's requirement 2. They're asking about the income statement. Now, where people are starting to get thrown off here is with the balance sheet. It seems like there's a struggle to figure out how to calculate the new balance on the balance sheet. The simple answer is you're just adding or subtracting to the total that you find on Boeing's balance sheet. So let's start here. Let's say, well, what accounts are impacted on the balance sheet? We know it's going to be an asset, a liability, or an equity account. So we know that the asset account we impacted was accounts receivable. It increased by $400 million. That was Singapore Airlines' promise to pay us more money, or to pay us cash in the future. We know that on the other hand, what else happened? Well, the other asset that we impacted was going to be inventories, right? And they will decrease by $330 million. Okay? Now, where people are getting confused is right here, this final line. Think about what else has happened to your balance sheet. Okay? Well, we increased a revenue and we increased an expense, right, in requirement 2. So 400 minus 330 is 70 million. So net income increased by $70 million. What happens when net income increases? Well, retained earnings also increases. So we have retained earnings that also increased by $70 million. Okay. Now here's the part where I think people are getting confused. Where do I find the new balance? Well, you've got to go to Edgar, right? You've got to go to that link at the top and go to Edgar. Type in Boeing in the search bar. It'll bring up Boeing filings. We're going to go to 10K, view all 10Ks, and the one we're looking for is December 31st, 2019. So we're going to pull it up. Now, quick tip for you, we know we're looking for financial statements. Those are going to be item 8 in every single 10K we look at. Item 8 will be your financial statements. Then it brings you to a drop-down list here. I've told you guys several times, not everywhere calls it a balance sheet. Some places call it a statement of financial position. That's where we want to go. So now what are we looking for? Well, accounts receivable increased by $400 million. What's the new balance? Well, I'm going to find accounts receivable. It's right here. So I'm going to say 3266 plus 400 is 3666. Okay. Inventories decreased by 330. So now I'm going to find inventories. Right here, 76,622. Okay. So 76,622 minus 330 is 76,292. Okay. And that is requirement 3. Now, finally, requirement 4 is just asking you for your accounting equation. So assets, let's look. What do we have? 133,625 minus the 330 is 133,295. What are our liabilities? Well, our liabilities didn't change at all, right? So our total liabilities, we got total current of 97,312. And then we're going to add to that all of our other liabilities here. The deferred income tax plus 413 plus 4540 plus 16,276, okay, plus 3422 plus 19,962. Sorry, I fat fingered a number, which happens. So 97,312 plus 413 plus 4540 plus 16,276 plus 3422 plus 19,962 equals 141,925. Now it's easy to get shareholders' equity, right? All we need to do now is say that 133,295 equals X, or equals 141,925 plus X. So we're just going to take 133,295 and reduce it by 141,925, and we will see we have a negative amount in shareholders' equity. That's okay. It's going to happen on occasion. That means something has gone wrong. They need to examine their operations. Maybe look at their expenses. Why are their expenses so high? Maybe they're holding too much cash. Maybe, whatever the case is, there could be a reason for a negative amount in shareholders' equity. So that's it for question 5. It really is not as complicated. I think sometimes when you guys first start seeing these types of problems, you overcomplicate them. It really is just asking you to add and subtract numbers to other numbers you're finding in the balance sheet here. So contact me with any additional questions.